Australia, far away from almost everything and surrounded by oceans on all sides. Since the declaration of the Australian Federation in 1901 until today, Australia has become one of the most developed countries in the world on various parameters. The Australian continent is not only rich in endemic animal species, which means they are found nowhere else, but also in minerals. I won't list all the minerals that make up the top exports from Australia so you don't fall asleep. Australia is unique in that it has not suffered from the so-called resource curse. On the contrary, its economy is quite diversified. Despite the fact that this continent was originally a place where Britain sent prisoners, Australia is now ranked as one of the least corrupt countries. In general, for many people, Australia is a place where nothing happens. But that doesn't mean life here is paradise. In Australia, labor productivity growth has been low for decades. In recent years, Australia's labor productivity has fallen, not dramatically, but quite sharply. According to Treasury's 2021 Intergenerational Report, labor productivity has contributed more than 80% of the growth in Australia's living standards measured by real gross national income per person over the last 30 years. Labor productivity is a measure that compares economic output against the amount of labor required to produce that output. Labor productivity should not be confused with employee productivity, which is a measure of an individual worker's output. Labor productivity is often used to calculate the amount of real gross domestic product produced by an hour of labor. As shown in this figure, labor productivity has been the most crucial factor, but not the only factor in improving living standards in past decades. For example, during the 2000s when productivity growth fell, growth in real gross national income per person was maintained because of a significant terms of trade boom. This made up for the decline in labor productivity growth during that period. The reasons for this situation are not unambiguous and usually depend on many factors. Growth in labor productivity is directly attributable to fluctuations in physical capital, new technology, and human capital. If labor productivity is growing, it can be traced back to growth in one of these three areas. Physical capital includes the tools, equipment, and facilities that workers have available to use to produce goods. New technologies are methods of combining inputs to produce more output, such as assembly lines or automation. Human capital represents the increase in education and specialization of the workforce. Australian households have suffered the biggest fall in disposable income in the OECD over the past 2 years, and economists predict it will take another 2 years for purchasing power to return to pre-crisis levels. A sharp rise in mortgage repayments and a jump in income taxes led to an 8% fall in inflation-adjusted household disposable income in the 2 years to March, according to an AFR weekend analysis of OECD data. The fall in real incomes was the largest among the 20 OECD economies measured and underlines the severity of the cost of living pressures on Australian households. Over the past year, household income per capita fell by 2%. Only Denmark experienced a larger fall than Australia in the 12 months to March. The fall in real incomes has taken household purchasing power back to 2017 levels, forcing consumers to cut back. Australia is in the group of 21 OECD countries that do not index their tax brackets to inflation. 17 OECD countries automatically adjust their brackets to compensate for higher prices. Because tax brackets are not indexed to inflation, increases in nominal wages lead to increases in average taxes as more of a worker's pay is pushed into the highest bracket that applies to them. Economists call this bracket creep. As a result, a near-record 16.4% of household income was lost to income tax in the 3 months to March, according to the national accounts. Here you can see the median house prices in Australia's major cities. Sydney tops the list of cities with the least affordable housing. Housing affordability is usually measured by comparing income with housing costs. As the average proportion of income required to service a mortgage or pay rent rises, housing tends to become unaffordable. The figures show that this is indeed the case across much of Australia. What's clear is that housing is being pushed further out of reach for each generation. About 38% of people born between 1987 and 1991 own their own home, according to the Australian Housing and Urban Research Institute, compared with 58% of people born between 1947 and 1951, the baby boomers, who owned their own home at the same age. A 2023 Victorian parliamentary inquiry found that the state's rental market is being squeezed by two groups of people in particular. Firstly, middle and high-income earners who would have been homeowners in the past but don't have the means or inclination to do so and so rent. And secondly, low-income earners who want to rent and would otherwise be in social housing if it were available to them. Talk to the property industry today, including builders and developers, and they'll tell you that excessive government regulation, overbearing local councils, onerous planning rules, and high government taxes are largely to blame. Another factor is migration. While the appropriate level is a subject of ongoing debate, it's generally agreed that our economy and aging population depend on new arrivals to maintain our standard of living. But migration, by definition, increases demand for some things, including housing. Bottom line, housing supply is the most important factor, say state and federal governments. Not enough houses are being built in the right areas to meet the needs of our communities, the Federal Treasury said in this year's budget. The Treasury points out that Australia has one of the lowest ratios of dwellings to population in the developed world. The situation is worst in Perth, where a combination of a slowdown in new construction and existing owners not moving, plus positive net migration into the state, has led to almost a quarter fewer homes for sale than at the same time last year. According to Reserve Bank analysis, every 1% increase in Australia's housing stock would gradually reduce prices and rents by about 2.5%. If you are aware of what is happening in Canada today, you can see the parallels with the situation in Australia. Canada has experienced a shocking decline in labor productivity in recent years, decoupling sharply from its neighbor to the south. The situation is similar in Australia, where productivity growth has also plummeted, tracking at similar levels to 2016, arguably. One of the reasons why Canadian and Australian labor productivity has lagged so badly is because both economies have become so heavily dependent on housing and immigration to drive growth. The chart shows the growth in household debt in Australia and Canada since the global financial crisis in 2008. In contrast, U.S. households have been deleveraging since the GFC as a result of these huge debt burdens and the prevalence of adjustable-rate mortgages. Australians and Canadians devote a significantly larger share of their income to debt service than Americans. Meanwhile, Australia and Canada have been growing their populations rapidly through net overseas migration, while the United States has been growing its population more moderately. Between 2005 and 2023, Australia's population swelled by 32% and Canada's by 24%. Both easily eclipsed the 13% increase in the United States population over the same period. This stronger population growth has required Australia and Canada to dedicate a larger share of their economy's output on housing construction. Both Australia and Canada have experienced capital shallowing, which occurs when business and infrastructure investments fail to keep up with population expansion, resulting in less capital per worker. Australia's cost of living crisis is not only caused by high inflation, but also by inflation exceeding nominal income growth, causing real incomes to fall. At the heart of the cost of living crisis is insufficient growth in labor productivity, which leads to a lack of growth in real incomes. Australia is one of the countries with the highest cost of living in the world. Take a look at the list of the top largest importers of Australian goods in the world. In 2020, China placed trade restrictions on several Australian exports in response to the Australian government calling for an inquiry into the origins of the pandemic. Trade restrictions on Australian products began between May and November 2020 in the form of higher tariffs placed on wine and barley, biosecurity measures against some beef and timber, and unannounced bans on coal, cotton, and lobsters. As a result, Australia's exports of certain goods to China fell to nearly zero. At the time, China accounted for 33% of Australia's export market, declining to 29.1% in 2022. China's trade restrictions against Australia have been relatively unsuccessful, with many Australian exporters finding new markets. In fact, they may have backfired by encouraging market diversification in some industries. China also relies on certain Australian commodities for its own industries, including iron ore, LNG, and wool, so any restrictions on these products would have a knock-on effect on China. China's trade restrictions on Australia in 2020 were an example of a growing trend of weaponizing trade for political ends. But they were also an example of Australia's resilience to economic coercion. With the exception of specialty products such as wine and lobster, many Australian companies were able to pivot to other markets, reducing the effectiveness of the trade restrictions. This time, China's restrictions have been quite subtle, but we should be prepared that the impact of China's deteriorating relations with pro-Western countries and possible armed conflict could have much worse consequences for the Australian and global economies.